Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 2nd, 2019. As always, hit the like button and subscribe to this channel. Also share this video with others if you found it useful. We're correcting sharply from the recent highs as Federal Reserve has made a decision to lower the interest rates. Didn't really change much as far as bonds are concerned. We'll look at the yield curve later on in the presentation. We'll also look at VIX. One of the subscribers asked a question about VIX. I don't use it personally, but we'll look at it. A couple of recent examples that we've been trading, and that's Intuit and Microsoft. High yield bonds are still moving in lockstep with stocks, so I don't see that many issues yet. Natural gas, copper, will cover those. Gold is moving higher despite strength in the dollar, and we'll look at forex action as yen moved sharply higher. And finally, we'll finish off with Litecoin as it seems to be running into resistance. Right, so let's look at S&P 500 ETF SPY. So if we can see record highs recently. So normal looking correction for now. This is a relatively sharp correction. Notice where it ended today. So again, throughout the presentation, I'll be using these 4 lines on the chart. These are indicators that are calculated, and you can have the same indicators on your TradingView chart. Simply drop me a line at MasterChartsTrading.com. So S&P 500 basically touched the green line today and kind of stayed above it. So to me this looks like aggressive buyers are stepping in here. So green line for me is like an aggressive level to be buying. I personally prefer to be buying around the blue line. And you can see a nice opportunity here for QQQ. Here was the actual alert to my subscribers, and now we saw record highs recently and then a pullback. So right this instant this looks like a just like a normal garden variety pullback. Is it going to be something more severe? Nobody knows really. But I mean, me personally, I would not be buying here because I personally like to see deeper pullbacks. So if it continues lower, if QQQ continues lower, Nasdaq, Dow Jones, S&P, they all look pretty much the same looks to them. So if that continues lower to the blue line currently at 176 for QQQ, then we'll consider re-entering or buying more depending on your trading preference. But overall, nothing out of the ordinary yet. And you can see Dow Jones, for example, also at record highs recently and now corrected. Notice where the potential bottoming action is taking place around the green line. So let's hopefully that might be it for the correction. Let's look at VIX. Now, I don't ever use VIX, and I don't see much utility to it, honestly. I mean, with my indicators, I don't use it because my indicators are more of a trend following indicators. So I just don't see utility of VIX because it's like a derivative almost of S&P 500, but it's an inverse. So some people like it. I don't see where I can fit it into my analysis. It's just, when volatility spikes, then, VIX goes up. That actually means like nothing whatsoever. So generally speaking, I don't use VIX. Some people like to use VIX. I don't. So the best I can say is if you've been using VIX and you like it, then continue using it. But I just don't see how it can fit into my analysis right this instant. Even though, for example, you can see some kind of a tap-in action for VIX here, maybe it's another tap-in action for VIX. It actually means nothing. So overall, VIX I would just not use basically. Couple of trades I wanted to show, a little bit of humble bragging. So here's one such trade into it, and we've been trading it for a while. You can see actually alerts a while back from the December, October. See where the arrows are. These are actual alerts to my subscribers, but you can see that Intuit has been an uptrend for a very long time, and you can see that basically, so long as like the breakout occurred way back when, like in 2015, it was below the yellow line here, and finally it moved above the blue, and it just continued. But I wanted to show the actual trades that we did. So a couple of alerts, for example, there's two alerts in December of this year. There was another one in January of, or rather December of last year, 2018. And then we can see a very nice move higher from January of this year. It's over 40% move in our favor. And even recently, you can see a couple of alerts as well. And you can see it's just a no-brainer, right? It jumps right at you. You don't need to think about it. Like, look, the price was somewhere above the green, then the price pulled back towards the blue. You can see right there in May of this year, and then another one in June of this year, and pulled back to the blue line, made a low below the blue, and then closed above it. So basically, this is all I need to know. Did it make a low below the blue and then closed above the blue line? Yes. That means we basically want to be buying this stock. And that's what we're doing. What we did at MasterCharts Trading is that we simply buy stuff that is closing above the blue if it's a stock. Another recent trade for Microsoft, also a very nice, very kind of classic run. You can see several up arrows here, one in November of 2018, some in January of 2019. Overall, nothing is out of the ordinary. I'm doing the same thing as before. I'm just looking for a dip below the blue line or a breakout above the blue line. So there they are. Again, if you need those indicators, I can share them with you on TradingView. It's really simple. And this is all we do. We just basically enter above the blue, and we sit and we trail and trail and trail. The more you sit and wait and do nothing, the bigger the gains usually. And this is purely psychology of trading. So you can see you could be taking profits, and I probably would be taking profits, but the smart investors are just sitting and doing nothing. And they usually come up ahead, the ones that are, doing as little as possible. So here's a couple of trades for you. Again, very simple, straightforward, no thinking really involved. You just need to see a close above the blue, and we just buy. So again, junk bonds are moving in lockstep with S&P 500. So right this instant we can see a pullback towards the green line, just like the S&P 500 is doing the same thing. You can see it clearly there today. For now, I would keep a bullish outlook on stocks and continue buying if there's any opportunities. Okay, let's look at the interest yield curve again. There was action on the Federal Reserve front. Overall, it didn't really change much. This is a free tool on MasterCharts.com called yield curve. So you can see right where I'm hovering is the date is August 2nd, 2019. Today you can see that the 30-year yield is almost at 2.3%. Actually, we can look at TYX 30-year yield, 2.39%. So very, very low basically. a few weeks ago, I'm gonna backtrack a little bit. So let's say to like May of this year, you can see the yield was significantly higher. Yield and bonds themselves move opposite to one another. So here's TLT, 20+ year treasury, basically 30-year treasury bonds, and you can see a huge breakout. In fact, those are the alerts, and I myself still hold the TLT position, albeit a quarter of the position. I sold already 3/4 of the position, but it's still going, so I'm holding the remainder. I mean, it could just continue. And that's what I'm trying to say, is that this is not a very good sign. When bonds are breaking higher like this, that means that there is fear in the markets. So let's look at the yield curve and the history of this recent behavior. You can see that the inversion of the yield curve, where the shorter term yields are actually higher than the longer term yields, began somewhere in February, maybe even, yeah, probably around February of this year. Before, it was pretty much normal here in March. And then as we continue forward, you can see that the short-term yields are basically staying the same, but the intermediate and the longer ones are dropping. And as we progress further and further, you can see that this inversion is getting worse and worse. And here's the look from the June of this year. And I thought we're going to kind of resolve this, but actually it didn't happen. And I was hoping that the Federal Reserve, when it lowers the interest rate, then this inversion would resolve itself. It didn't. So right now we're seeing August 2nd today. The yield curve is basically the same shape as it used to be. Except for it got lower. So in other words, the entire bond complex from short term to long term more or less just moved, the yield just moved slightly lower, basically. As I showed before, right now the short-term yields are still above the very long ones, the 30-year, where I'm hovering right now. So, for example, in 2007, here you can see yield curve inversion with the short-term yields above the 30-year yields, and a similar looking pattern here in year 2000, with short-term yields above the longer ones. So again, we're kind of getting there, and the lowering of the interest rate by Federal Reserve didn't really do much. In fact, bonds higher, broke significantly higher after the interest rates cut was announced. So I am worried about this behavior. You can see 10-year bonds also breaking higher. Short-term bonds did not yet break higher, but maybe the Federal Reserve was able to stop the inversion, but it doesn't look like it yet. It just seems like the whole curve moved lower. In other words, we're again seeing drop in interest rates. We'll see where that gets us. I am a little concerned, to tell you the truth. Here's TNX, the 10-year Treasury note yield. It is currently at 1.86%, so a 10-year right there where I'm hovering, 1.86, and it's lower than the short-term yield, than the 3 months one. It is not normal. Same goes for TYX, 30-year yield at 2.39%, so very low yield environment, and it's getting lower and lower, but the yield curve is not, getting normal. I want the yield curve to look something like that. That is an ideal looking yield curve. Alright, let's continue to various commodities. Really not doing much. Yes, a few months ago, did send a couple of alerts. So, 2 alerts were sent. One in December of last year, another one was in January of this year. And this is all I did. When we short, we inverse our thinking. We think that we want to sell on close below the red line instead of buy on close above the blue line. So this is what people would do, is basically short. If you have especially if you have futures account, it would be ideal. And if you kept your position open, which again smart traders do, they keep their positions as long as possible and they ride this trend. They just keep going and going and going. So you can see a new low here now. I don't see a bottoming pattern in natural gas. We had some questions about natural gas bottoming. I don't see it yet. Here's copper. Again, we traded it at MasterChartsTrading. I didn't trade myself. It is not ideal to trade at retail level. If you have a futures account, then wonderful. You can trade it both on the upside and downside. Also, you can, if you have a CFD, access to CFD, doesn't really work. You know, in the United States, it doesn't really. You can't really trade CFDs in the United States. The contracts for difference. But if you are able to trade CFDs, then wow, look, beautiful moves in your favor. So overall, copper looks bearish with a new 52-week low here. Here's copper miners. See, same thing, basically is following copper lower. I thought copper is going to break higher and copper miners with it, but it didn't happen here in July, and now we see a collapse to new 52-week lows. So overall, copper seems bearish. I would continue placing bearish bets. Alright, let's look at gold. Here's XAU USD. We are trading it at MasterCharts Trading. You can do gold futures, you can do GLD. GLD alert was sent recently as well. Overall, XAU USD or gold futures moving higher, despite dollar also gaining in strength. So this is not a normal behavior. Usually you can see XAU over USD. So if USD gets stronger, then this currency pair should go lower, but it's not. GDX also, GDX gold miners, so very close to 52-week highs. Big action here. I mean, look at this. This could be like a bullish engulfing. I mean, bullish engulfing at the highs don't mean much, but this one looks just huge. I mean, there's a bullish engulfing right there on 31st of July and 1st of August. It could just continue higher also. Right, well, here's the dollar index. Following the announcement by Federal Reserve, dollar continued higher. Again, not a very normal behavior, but that's what's happening. So that's a new 52-week high. So far, no turnaround that I'm aware of, and I keep saying that, you know, we have a narrowing of the trading range, but we don't have a breakdown. So there was no breakdown yet for the dollar, and it just continues higher. Euro versus US dollar continues lower, and notice where the topping pattern occurred right there, late June, early July, and then a nice push lower, and it just made a new low. So if you shorted it here in late June, congratulations. British pound, big move. I mean, here's the breakdown, 16th of May, and it just continued. Big move lower. So overall, you can see the top in action right at the red line. A couple of pushes here on 24th, 25th of June. In early June as well. There was an opportunity to short in late May. But overall, still bearish. Big move on USD JPY in favor of Japanese yen. So let's look at futures, Japanese yen futures. There's the Japanese yen futures. Big move. Look at the bottom in action right there at the blue line a couple of days ago, and then just a big rally. So it's in favor of Japanese yen, and it does make sense, because it looks like we had a breakdown here on the 31st of May, couple of opportunities, and now a big move. All right, so let's look what else we have here. So USD JPY again moving in favor of Japanese yen. Perhaps this is the beginning of the turnaround for the dollar. If it happens, it will happen. It will be pretty obvious. There will be no questions about it. You will see a breakdown on this chart below the red line. And then finally, let's look at Litecoin. I'm not showing Bitcoin because we have a trade going. So Litecoin, right now, there is a possibility of resistance here at the blue line. You can see it kind of rallied. It's just price action. It's just basically candlestick reading. So here, for example, on the 18th of July, I was like, maybe I should send an alert, but then I just didn't like this candle. That wick out of the top is a little too high, too big, so I didn't send any alerts. Probably a good thing. I thought here on the 31st of July we're just gonna finally see a push higher. It closed just below the blue line. Next day also closed just below the blue line. The next day also kind of touched right below it, and for now it's still, this is what I would call resistance. So let's see if this resistance will reassert itself. If it does, then we could see a move lower as well. And if that happens, then maybe Litecoin is done for, and we need to think about selling it, shorting it. All right, that's it for this week's presentation. If you're ready to sign up, please head over to MasterChartsTrading.com, and that's MasterChartsTrading.com. Click on sign up right there. We have now 3 different levels of services. We have alerts, which is basically you will get, things like this. For example, Microsoft. Then I would send an alert that if I was trading it, I would be buying it, and this is a good opportunity. Also, if you want just the trading indicators for TradingView, then you can have these 4 lines on your chart and just look for MasterCharts Trading price action indicators, but you need to buy the service first, otherwise it won't work. If you just assign them to your chart, it will not work. So you need to buy the service here on MasterCharts Trading at $29.95 per month, and then I'll open the door for you. Also, if you sign up for both alerts and trading indicators, it's a big discount, and especially right now we have a sale. If you get a yearly subscription, you get a very nice discount. This will definitely not last. It's a very low price right now. And also, this alerts and indicators, the service may be reconfigured slightly. I'm considering creating more of a VIP kind of service, where some of the alerts that are currently sent to the alert service will be only available for the VIP service. But if you sign up right now, even if I in the future update the service, you will still get everything that you're signing up for now. So I would highly recommend you get alerts right now and consider getting alerts and indicators if you trade on your own. Right, that's it for today's recap. If you have any questions, please send them in. Thanks for watching, and have another great trading week. Bye-bye.